From a financial planning standpoint, what's
Yeah.
the fundamentals as far as building wealth?
Yeah. So the first thing, in my opinion, is you have to establish. I think you start with an estate plan, because that's kind of starting with the end in mind, right? It's like, all right, well, what do I want this to ultimately look like? How do I want to preserve this wealth, and how do I want to pass it on, right? Then from there, right, you have a journey until you get to that target. So you're probably going to be in the accumulation phase. You're not going to have all the money right away. So
So
the
the
next
estate plan, what will be in the estate plan?
will be in the estate plan. So you would have a trust, a will, medical directives, right? I was actually talking to a lady on the plane about it because she's an estate planning attorney, and she was like, one thing that people really forget about and overlook is the medical directives piece, right? Because like everybody thinks about what happens when I pass away, but what happens when you're here and you're incapacitated and you need somebody to make decisions on your behalf,
Like
right?
a living will.
Yep. Yep. And so you had that as a part of your estate plan. And then from there, it's like, okay, well, I have this phase or this journey to get to this target. So now I might want to purchase life insurance. So that if something happens to me before I accumulate all the wealth, I already have a vehicle that's going to fund the dreams and aspirations that I have for my family. Right. Then from there, I think the next most important thing is cash flow. I don't care how much money you make, right? If you don't have a great handle on your cash flow, if you're not a good steward over the resources that are flowing into your bank account, right, you're not going to be able to have the resource to allocate towards building wealth. Once you have a strong, solid base on your cash flow, then we can talk about investing and retirement planning, because we know how much we can allocate because we've created a cash flow plan, right? And then other than that, just filling in the gaps on any other risk management, making sure you have the right health insurance, disability insurance. And one thing that people don't realize is you're actually 3 times more likely to become temporarily disabled in your working career than you are to die prematurely, right? So a lot of people overlook disability insurance, and making sure that we are protecting you and putting a good moat around your financial plan, so that as you're building the wealth, you can make sure that you're watching out for any unforeseen.
Well, so let's break this down a little bit if we can. What's the best life insurance that somebody should get?
Yeah, I think it depends upon your circumstances. I think if you're young and you don't have a lot of cash flow, I think a renewable term policy is great, right? Because now you can still have the coverage and protection, but as you get older, you have the ability to convert that into permanent insurance, right? Because insurance is based off age and health. But in the ideal scenario, everybody, in my opinion, would want to have some version of permanent insurance. I think whole life insurance is great. Some people like index universal life. And I think having that as a part of your overall strategy is amazing, because that's going to create tax-free cash flow available, right, when you pass away. So that as your family is navigating the estate planning conversation, you already have that cash available and don't have to liquidate assets or do anything like that.
And one thing we always talk about is how like life insurance is oversold in the Black community.
Oversold?
Yeah, it's overemphasized on social media for people to become their own bank with life insurance. And my thing is like, if you ain't got no money in your own bank, how you gonna spend some time? How you gonna focus on becoming your own bank? So there is a place for whole life insurance. There is a place for permanent insurance, but like that's not an investment. Like there's a couple things you need to do, at least in my opinion, from a financial advising standpoint. There's things you need to have in place before you set up that permanent insurance. That permanent insurance is not your investment account. It's not your IRA. It is a place for you to invest in after you got the basics down pat. One thing I see a lot of people doing, they don't got no money in their savings account. They don't got no money in their investment account. And they're being told to stuff their life insurance policies with money, even though the cash value won't accumulate for 2 to 3 years.
So explain that. Explain, just to go into that, because for people that might not be fully understanding what you're saying.
Yeah.
There's term insurance, which is just regular insurance.
Right.
It's like car insurance, right? You pay it for 10, 15, 20 years. If you die within that time frame, your family gets money. If you don't die, then
they keep the money.
Right.
Yeah.
But then what you're referring to is like whole life or universal life, where it lasts your whole life, and then there's money that grows inside the policy.
Exactly.
So infinite banking, that's the term?
That's the term, yep.
So that's been popularized online, where people say, okay, utilize this life insurance policy as a vehicle to put money in, and then you can borrow money from your life insurance policy on a tax advantage basis, as opposed to having it sitting in the bank.
Yep.
Right.
Yep.
So you're saying that that's not necessarily the best way to go about it for the average person, right?
It's not, because I think it's overtaught but underexplained, right? And so if you put $1,000 a month into this life insurance policy, people think, oh, I can go borrow the money immediately. The problem is the insurance company is going to keep that money first. Your cash value is not going to accumulate to about the second year. So if you put $24,000 in there and then you're like, oh, I need some money. And they're like, well, your cash value hasn't accumulated yet. And then now you can't afford to do $1,000 a month anymore. They cancel your policy. The insurance company keeps all the money.
Right.
So it's just, you have to be educated on it because it can be a good policy, but there's also a way where you can put that same $1,000 a month into an investment account and invest the money into stocks or index funds. And then that broker will let you borrow against your investment portfolio, tax deferred the same way a life insurance policy is. But the thing with this strategy is the money is available immediately. So if I put $1,000 a month into this brokerage account, it's $12,000 a year, I can immediately borrow 50% of it.
In your name or in your business name?
In my personal name.
Okay.
Right. So
That's like margin account you talking about?
Yeah, if you need to borrow against it, and then you pay the interest back, but that's fine. But now you got all the money that you need, and if you can't pay it back, the insurance companies, the brokerage companies, will say, okay, well, we're going to use your investment as collateral. I just think that's another way to go about it because the money is available to you immediately versus you having to wait into 2 years for a life insurance policy. I think there's a place for everything. I just want it to be communicated better to our people so they can fully understand it. Because what they don't understand is that the reason that the person is telling you to do this is because they make more money by you buying a whole life policy than they do if you buy a term policy. So I think there needs to be more transparency around the education of life insurance. It's needed,
for sure,
but it just needs to be talked about a little bit deeper.